perspective on the markets and more. We are now joined by Andrew Ferris, who's the CEO of Ecogenesis Advisory, joining us. Hi, good morning, Andrew. Thank you so much for taking the time out and joining us on Market Cafe.
It's always a pleasure.
Andrew, quickly, firstly, important cues to watch out for. We have the Jackson Hole meeting this week, and also it is going to be the last meeting, Jackson Hole meeting for Fed Chair Jerome Powell, where he is going to emphasize on Fed's independence, and also a 25 bips rate cut is what we are penciling in. Now, come second half of the year, now U.S. markets are sitting at record high levels. Come second half of the year, how do you see the U.S. markets to be shaping up? Because the tariff news is still underway. There has been no conclusion to that till now. Also, we'll start seeing the kind of impact that it might have on U.S. inflation, so if you will. So by the end of this year, how do you see the markets panning out?
First, we have to separate two things. What's happening now on the chats with Ukraine, Russia, and the European Union doesn't have any direct economic effect. In other words, it covers the headlines, but I don't look at it as a guide to what's going to happen to the market. Second point is yes, the S&P is at an all-time high, but it is in relative terms, underperforming every single European and Asian market. Okay, the S&P is year-to-date 95.95% up year-to-date. Okay, then the rest of the indexes in Asia and in the European markets easily outperform. Not every single one of them. Okay, Sensex, for example, is about 2% up, so I'm not suggesting that, which means that obsessing about the European markets and obsessing about the Asian markets leaves out the fact that there are very good places where to put the money. I'm telling my clients not to add to their US shares, to in fact progressively remove holdings, because I don't think the Fed is going to cut interest rates anytime soon. I'm looking forward to the Jackson Hole meeting, where possibly Powell is going to repeat what he said before. For the time being, inflation is nice and strong, flat and partially rising. These are the numbers. This is not my impressions. Okay. And the fact that the labor market may or may not be as good as it is expected, still, they've got two things to look out: inflation and the labor market. And it looks to me as if they will be looking at inflation rather than whatever signals the labor market has given. And therefore, despite what Trump would like, they're not going to cut interest rates anytime soon.
Hi, Andrew. This is Kanishka also joining in. Now that we've spoken about interest rates, you were just mentioning, about the cues that we need to track from Europe. Now, we are awaiting, some kind of solid outcome when it comes to Trump's meetings with the Russian president, as well as Ukrainian counterpart. But so far, we do not have any solid information coming out of there. But despite that, the U.S. markets have not been very volatile. They've ended around the flat line yesterday. What do you think is it that the markets are pricing in?
Well, let me repeat what I've just told you. Forget the markets and what's happening with Ukraine. Two completely different things. Okay, so I've already explained to you that I don't look at the markets in relationship to Ukraine. What I've just told you is I look at the markets at their overall performance, and despite the exaggerated concerns about the S&P, it is underperforming every single major market in Europe or in Asia. Wow, not bad.
Andrew, before we let you go, quick word on the Indian market. Indian markets have been, I would say, fairly resilient to even the tariff news that was coming in. I mean, we have been very, very range-bound. There haven't been any strong drawdowns that have happened, even after the 50% tariff news. By the end of this year, what do you pencil in for Indian markets? Because the FIIs are continuing to sell on Indian markets. Could the tides turn?
Not really, actually, because in terms of the overall performance of the Indian economy, particularly with a good outlook on inflation, and therefore the possibility, I don't think for one moment that the RBI is going to cut interest rates anytime soon. But then, of course, we can look forward to the Diwali decreases in taxation in some components of consumer expenditures, particularly on small cars and on health insurance, and that will be a minor boost. Again, don't mix these up with tariffs. These are taxes on local expenditures. These are not taxes on importation of health goods. Now, small car tariffs, I need to look at them in some detail to find out whether the Diwali tax cuts will have any effect. Right now, I genuinely don't know. But anytime that the government cut taxes, that's always good news.
Thank you so much, Andrew, for joining us and helping us understand all the macro cues that we need to track this week. On that note, we'll let you go. Thank you so much for joining us. But on that note, we'll also take a